Anil Pant joins us now to take that conversation forward. Anil, good morning. Thank you for joining us. When we spoke 6-8 months ago, the proposition for Aptech shareholders was that you were trying to create a platform company which in a sense was giving you promise for skill and to get a job. How have things moved for Aptech and for your business during the second wave, I beg your pardon?
Sure. So thanks for having me, Nikunj. And when we spoke the last time round, I talked about how companies like us had used technology in a big way to stay relevant. And I'm happy to share that last time I talked about 2.5 million student hours of learning. This was as of September, October. Today it has doubled. I mean, we're almost at close to about 5 million hours of student learning. There has been no impact in terms of jobs. In fact, jobs, if anything, are higher in the media and entertainment space because almost every large studio, and we've got almost about 800 recruiters who hire from us, is desperate for talent. Hiring is at an all-time high right now. And there has been a significant, let's say, contribution of technology to keeping the pipeline of talent flowing. I mean, you know, in our normal scheme of things, if we had only been dependent on in face-to-face learning, it would have been almost impossible to meet the requirements that the recruiters have. Thanks to technology, thanks to the fact that we created a platform almost about 10, 11 months ago, we're extremely relevant both in India and in almost all the about 30 odd countries that we serve.
Okay. You know, a lot of parallels have been drawn that Edtech, which in a sense, even though it's catering a different, different genre, it is targeted towards college and school-going children and students, could eventually Edtech also start impacting your business? Because all it takes to perhaps scale up the entire vocational skill businesses that you need to add more product offering. Is the Edtech expansion more like a disruptive threat for a business model like yours?
So Nikunj, let's look at this in two ways. The first is when you talk about can it be a threat? Yes, it can be a threat. Now, will it be a threat is the more relevant question. And one of the most important parts of learning is pedagogy. Now, if you look at, if I have to make a person employable, apart from teaching them the point skill of the software or the piece of technology that they're going to use, there are other things which go into making this person employable. It could be like working under time pressure. It could be like, how do you get them to work as teams? How do you make them resilient? How do you make them into good presenters? There are a lot of things which the current model of most offline players like us has been built over 30 years. Is the relevance of this going to go away? My own belief is no. Now, what is likely to happen in the next about, let's say 5 years, is that there will be a happy blend of technology and face-to-face learning. So a lot of the theory, so for example, the way we are handling it, the theory part of it will anyway continue to be online. So when a student has learned the theory and comes to the class, instead of learning theory in class, they will be applying what they have learned at home into real life scenarios in the classroom. That coupled with all the other things that we do to make them employable, I believe will make for a very, very strong business model. And we have a word for it. We call it the phygital model, a combination of the physical world and the digital world.
Okay, so what about the kind of growth you're seeing across geographies, across tier 2, tier 3, more like tier 3, tier 4 cities right now, given that Edtech has just kind of thrown open the opportunity at this point of time? And what do you feel are some of the differentiating factors when it comes to your company, Mr. Pant?
So I'll answer this in two parts, Aisha. when you talk about the growth, if I compare it to last year, I mean, it's not really a comparison because the growth is almost about 180, 200% in terms of, student enrollment or booking. But even when I look at it in comparison to the pre-pandemic period, we are almost at about 65, 70% of the enrollment levels that we were at pre-pandemic. And that's a very, I would say, healthy sign for the business. The second part of the question that you asked, the relevance is purely because as a platform company, our only job is to make sure that the person who comes and takes a course from us gets into some kind of job or the other, and I want to shed some light on that. From Aptech directly, we have placed more than 3,000 students, and this is in the top maybe about 20 or 30 of our recruiters. We have 800 recruiters, and the model is that a lot of our centers do their normal recruitment or normal placement processes themselves. They have very strong teams. What we have seen is that the relevance of these courses and the increased hiring that has happened, especially in the media and entertainment industry, has led to one very significant fact, and that is the average salaries have gone up from about 15 to 16,000 rupees per month to about 26,000 rupees per month. So much so that as part of our counseling today, if a student comes in, I mean, the first question they ask is, "Meri naukri lag jayegi kya?" And invariably the answer that is given to them is, "Teri naukri lag jayegi. Lekin 15,000 ki lagegi, 25,000 ki lagegi, ya 50,000 ki lagegi." That is dependent on you as a student and the the assimilation of all the things that we teach you in the center, including making a good portfolio. So from a relevance perspective, I believe we are even more relevant than ever because this media and entertainment space, in which we are a very strong player, is on the same cusp that the software industry was in 2000. So if you look at the companies, the large studios in India, in the last 5 years, they've gone from 50 people to 5,000 people. And they're talking about significant more expansion in the next 5 years. So, sometime in July, we have this AVGC summit with the CII. And in that, one of the things that we are stressing to the government is the massive employment generation that this sector can create. And I guess that's why we will probably still stay extremely relevant, Aisha.
Okay. Now, it can also be, of course, a high capital business. Are you looking at investing further? Does the online opportunity allow you some room for or some buffer in that sense? What are the kind of margins that you're witnessing? Traditionally, it's been fairly high margin. Does that look sustainable? And what does that mean for ROEs? Lots of questions all bundled into one.
So one of the questions is that I'm very happy to share with you that for COVID-adjusted time frame, right? I mean, COVID was a bad period. We've had a CAGR on profits of almost about 26% over 5 years, right? Now, whether this is sustainable, the question that you asked is about the sustainability. We are in an extremely asset-light model. So even if we are talking about, going online completely, it actually has a benefit even for the centers and a benefit for us in terms of being able to actually further reduce costs. And margins have been only increasing over the last 5 years. A large part of this margin increase has happened because of our international business, which is doing extremely well. So for example, Vietnam has been growing by almost about 35-40%. Nigeria has been growing by almost about 40% year on year. Qatar has been growing by almost about 35-40% year on year. Egypt has been growing by about 20-25% year on year. So a lot of the key geographies where we've been investing time and money have been yielding better results. As an asset-light model, the whole fundamental of the business is that as your revenue increases, there is a let's put it this way, non-linear increase in the profitability.
Anil, there's a promise of the enterprise business, and it was a great promise 2016, 17, the general view in the market was that Aptech will now be a education platform plus an enterprise company. Have you decided to scale that business down completely? Would you be focusing on only the education and the training business?
So Nikunj, let me answer this question. I mean, I'll need probably about a minute for this. The enterprise business took off very well, in FY16, FY17. And then we had 2 or 3 roadblocks. I mean, unfortunate thing in India is that if you have a bad delivery in an enterprise business for a business that is just starting, the kind of headwinds that get created are very, very high. And for the last 3 years, in fact, we've not been making money on that. We've been only losing money. As a consequence, the board decided that we will concentrate completely on something that we know extremely well, and that is scalable, and put all our energies and backing of capital into a business that we know has been traditionally giving us anywhere between 35 and 40% PBT levels on the retail front. We've been very transparent on this. We've announced it onto the exchanges also that this business, we are in an exit mode. We've appointed an investment banker. We're looking at buyers for this business, and as and when we find a relevant fit, we would like to exit this business.
Which is a parallel global model like Aptech. In the IT space, we always compare. You compare, let's say, the valuations of Jubilant Foodworks with what is happening to the Dunlo platform. What is the global parallel for you, for us to understand? Since the proposition is that Aptech is morphing to be a platform company, are there any relevant companies at a global level which offer the same service? I'm keeping the enterprise business aside for a minute, let's keep it aside, but the existing business.
So, the closest comparison that used to exist in this business was an Indian company, which was NIIT, which has shifted its focus more to corporate training now from the franchise-driven business. But if I look at it from a perspective of comparability on a franchise-led business, then I think the closest comparison that comes in is probably, let's say, a Starbucks or a Jubilant Foodworks or any company which is into franchising out their product. Now, when I talk about franchising, we look at 2 or 3 things. One, it being an asset-light model, which this is. The second comparison that we have is in terms of same-store sales growth. And if I look at the same-store sales growth, Nikunj, I mean, and I'm excluding the COVID period, I'm talking about 4 years from 16 to 20. The same-store sales growth was as high as about 20% for all the blended businesses, for all the growth businesses, which was Arena, Mac, and Lakme Academy powered by Aptech. So, a same-store sales growth of 20%, 15 to 20% expansion on the center, entering new geographies, and suddenly you have a business which can really explode. It's just unfortunate that this pandemic has hit us. Otherwise, we would have been on a solid growth path. And I'm sure that once this is over, once the vaccination is completed in the next 5-6 months, I believe that you'll really see the true power of Aptech or the model that we have created unlocking.
So progressively, how will your cash flows move for FY22? FY21 was tough. There must be write-offs because of COVID. This year, if business comes back, are you in an investing mode or are you in a mode where you will be conserving free cash flows?
So we are already in an investing. If you look at the fact, Nikunj, that even for last year, we have declared a dividend of 22.5%, right? And from a cash perspective, there is absolutely no problem. We have 0 debt. At any given point of time, we are sitting on about 70-80 crores of cash. And I believe this will only increase. I mean, I believe that, by the end of this year, we should be sitting on about 100 crores of cash. Now, how we use this money, whether we use it to pay dividends or whether we use it for driving business, is something that the board is still looking at. But we are investing in creating a Edtech platform separately, which is still in the initial stages. I think we should be ready to go live by somewhere in the month of July or August. And we will be investing money there. And we have adequate money to fund our operations and to fuel any investment that we need in the next 18 to 24 months.